Well, there was a good end of the week for the U.S. stock market. The Dow Jones climbed more than 650 points. The S&P and NASDAQ also ended the day in positive territory. The S&P closing up around 2% and the NASDAQ around 1.75%.
John Leer, chief economist at Morning Consult, joins us for more. John, what was driving the markets today?
Thanks for having me on, Charlie. There's a lot going on with markets, and I think it's a difficult time to interpret them because right now we're in this weird phase where good news is actually interpreted badly by stock markets because it means that the Federal Reserve is likely going to have to be a little bit more aggressive when it comes to raising interest rates. I think today what was surprising to some was just that we started to see a decrease in consumers' inflation expectations reported by the University of Michigan earlier this morning. We've been tracking this actually on our own. We have a separate survey out with researchers from the Cleveland Federal Reserve where we track weekly inflation expectations, and we've started to see them turn over earlier this week. And so I think, basically there's this view out there that the Federal Reserve is not going to have to be as aggressive as they had, as markets, I guess, had feared that they might have to be.
So to that point, John, it was my understanding that investors believed that there was a growing possibility the Fed would hike interest rates by a full percentage point at its next meeting to curb inflation. But you're saying you don't think that that is so likely?
That's right. Well, I think the data out this morning suggests, or at least markets interpreted it that way, that Federal Reserve maybe wouldn't have to do as much, in large part because there's some sign out there that inflation expectations are more well anchored, I think, than folks had feared. Of course, the Federal Reserve has been very clear up front that they remain data dependent and they reserve the right to adjust their approach depending on the way the data shakes out. I think the other thing to note is that we had retail sales out today. Was up on a nominal basis, slightly up, but on a real or inflation adjusted basis, I think it'll be a pretty significant decrease. And so there's just a growing sense out there that the economy is in fact starting to slow already, and maybe the Fed doesn't have to do quite as much as we had thought a few weeks ago.
A new analysis from the Economic Policy Institute reports that the value of the federal minimum wage has fallen to its lowest level in 66 years due to high inflation. What guidance do you have for workers receiving this wage and struggling amid high cost? And how soon before we might turn that corner?
It's a great question, something that we struggle a lot, or we see, I should say, directly how much lower income adults are struggling with elevated inflation. Early on, we started to see a reallocation in consumer spending. So as gas and groceries took up a larger share of consumers' wallets, they started essentially pulling back in some of those discretionary areas. What we're seeing now is just an outright contraction in spending, where consumers are saying, you know what, given the trajectory of prices, it doesn't make sense for us to go out and buy a vacation or something that isn't part of their sort of essential basket of goods. And I would expect to see that trend continue throughout the rest of the year, where you'll see sort of a lot of these discretionary purchases at least delayed and in some cases canceled.
John, getting back though to Charlie's question about the minimum wage and the way it stacks up against inflation. I mean, we know that especially in the lower level, the labor market has had trouble, right? I mean, retailers and restaurants and places like that have had trouble hiring enough people. And when you're paying a minimum wage and your minimum wage is barely stacking up against inflation, aren't a lot of people just going to say, heck with it? It's almost not worth working at this price.
There's certainly part of that. I think, a lot of folks had expected at this point to see greater labor force participation or to see more folks starting to look for work as their spending was being eroded by increases in inflation. I think something to keep in mind, of course, is that workers or folks who are thinking about working, it's a fairly complicated or complex equation that they're trying to solve, in a sense, where it's true that coming out and working would provide them more, but there are costs associated with that too. They've got to go pay for transportation. Well, transportation is a lot more expensive now than it used to be. So for all those folks who who have to drive to work, the thought of driving to work and having to pay that extra gas every day, the wages, of course, have not kept up with what we've seen on the gas front recently.
Yeah, it's hard to make the case to do that when you're making minimum wage, right? All right. Well, John Leer, thank you so much for your insight. We appreciate it.
My pleasure. Thanks for having me.